Good morning and welcome to our budget hearing this morning. We're joined by the Pennsylvania Department of Insurance and PENNIE. We want to thank our insurance commissioner for being here. Before we begin, Chairman Struzzi, any introductory comments?
Yes. Good morning. Thank you, Chairman Harris. Good morning, everyone. Thank you for being here. Before we begin, I just want to make sure everyone understands that the amount of money we're talking about and the budget requests for the insurance department, it's roughly about $43 million, a $3.9 million increase, and then for the PA Health Insurance Exchange Fund, or PENNIE as it's known, roughly about a $52 million request, or an $11.4 million increase, 28.12%. Though I think it's important for people to note that the majority of the funds that are allocated to both of these agencies come from mostly fees and other funds. So with that, we can move forward with the questions. Thank you.
Thanks, Chairman. Commissioner Humphreys, if you would introduce all of the folks who are at the table with you, after which we'll swear everybody in and we'll get started.
Sure. With me at the table are my Chief of Staff, Jody France, as well as my Budget Director, Anu Upadhyay. Behind the table is my consumer-facing Deputy Commissioners, Dave Buno, Shannon Logue, and my Legislative Director, Sarah Spots.
Great. Could everybody rise so we can swear you in? Do you solemnly swear that the testimony you're about to give is the truth, the whole truth, so help you God? All right, thank you. You may be seated. We're going to start with Representative Mullins.
Thank you, Mr. Chairman. Good morning, Commissioner, and everyone for being here. Thank you so much. I note within the proposed budget that there is an additional allocation for additional staff, which I understand to be for investigating and enforcing details surrounding Act 77 related to pharmacy benefit managers. Can you just walk us through how you envision additional staff helping with that effort?
Yeah, the additional staff are going to come in a number of different places. I think a few additional staff will come into the consumer complaint side. So they'll be working with pharmacies as complaints come in. A few positions will be dedicated to the rate review and product review side. So looking at the front end, making sure as products are filed for next year that the terms and the contracts and the benefits are consistent with Act 77. We also suggested a few staff on the legal appeals front because we anticipate a number of appeals coming from pharmacies on particularly what's categorized as specialty drugs. So to be able to adjudicate that quickly as possible, we added a couple staff, or are recommending that we add a couple staff in those positions as well.
Well, that's music to our ears, those of us who have just some outstanding generational cornerstone community pharmacies back home. I know that we were very invested over the last few sessions, particularly in the last session as we successfully passed and saw signed into law Act 77 regarding this much needed and long anticipated regulation and enforcement mechanism in state statute. So I know I feel as if I claim the best community pharmacies in all the land in my district, but I know some of my colleagues who work so hard on the bill would feel the same about theirs. So I hope you understand just what gems we have in our communities that are really much, oftentimes the front lines of our healthcare delivery system, and what a critical cog they are in that machine. I've also heard from them anecdotally from community pharmacists that there have been some challenges around the implementation of the act. Like, for example, if a contract is signed out of state, or even if the PBM, the insurer, the pharmacy, and patient are all doing business or are located in Pennsylvania. Can you talk to us about those challenges and if there are additional potential legislative fixes that would help to close if there is a loophole that indeed you identify?
Yeah, I think one of the challenges with insurance regulation generally is that each state is the primary regulator of the commercial market for policies written and delivered in that state. So for us, when a policy is written in Pennsylvania that's approved through the Pennsylvania Insurance Department, that's one that on the commercial side, which again is only 20-ish% of the overall insured population of Pennsylvania, but we can regulate that policy. Where a policy is written in another state, and this goes for large commercial risks and others, like large group market, when it's written in another state, that other state's insurance department has authority over the policy terms and would have reviewed those policies. So it's not so much necessarily something that we can address. It's a fundamental tenet of insurance regulation as you regulate the policies consistent with what's approved and delivered in your state versus those that come in from other states, which you'll see from time to time in the large group market in particular, and then certainly in the self-funded market, which we can't regulate at all, but I mean, that's something that would come across state lines and be governed in the self-funded context actually through the federal government.
So I guess to address an issue like out-of-state versus contracts being signed or business doing in-state, is that something that would require federal statute?
Not necessarily. Well, the self-funded is federally regulated by the Department of Labor, but a federal statute wouldn't necessarily address which state had jurisdiction over the policy. It's more of a contract issue of where the contract's issued.
All right. Thanks so much for your time.
Thank the gentleman. Representative Brown.
Thank you, Chairman. Commissioner Humphreys, welcome. It's been about 10 years since the Insurance Regulation and Oversight Fund has been created to help fund the insurance department. And during that time, typically the excess funds are returned to the general fund. At the end of July 2024, the amount returned was about $21.2 million. For July of 2025, you're projecting $16.2 million to be returned. And for July of 2026, the projection is $5.2 million. It seems the amount being returned continues to decline. Do you have any projections to indicate when this amount will disappear, and do you have any concerns about that?
I don't think you'd get to a point where it would disappear. And a lot of the discrepancy is actually a timing issue. A lot of our revenue will come in the next 2 months. So as we pull it from a date in time, it doesn't necessarily reflect the significant increase that comes in when we're projecting out for out years. Like when we projected 23, we projected $6 million. We actually gave back 21. When we projected 24, we projected 7 million. We actually give back 16. So a lot of that is just in the change in kind of the timing and when that data is pulled from a budget standpoint.
Okay, got it. But having said that, your expenditures continue to grow faster than the revenues. So is this a problem as you see it?
No, I don't foresee it being a problem at all, because I think what we're talking about is the additional revenue that we bring in on top of what funds PID and then on top of what's already designated, because as you mentioned, it's a 50-50 split on everything that we bring in. But then the IROF statute actually requires us to go back and has a spending cap based on what I spent in the prior year, and that's an additional give back. So the expectation is that we will continue to give 50% on what I would expect will continue to grow, maybe at a slower rate on the overall revenue that we bring in, but I don't think you'd run into a position where there would not be a give back.
Okay. Along these lines, I have a technical question. On page C1, 28 of the governor's budget in the general fund revenue detail, there's a line labeled Insurance Contra IROF return, which is the money coming back from the IROF to the general fund. The number listed for 2025-26 is $9 million. On page H61, is the Statement of Cash Receipts and Disbursements for the IROF, and it lists the return to general fund for the IROF for 2025-26 as $5.2 million. Should these numbers be the same, or could you explain why they're different?
Yeah, that gets tied into the timing, and I'll let Anu speak.
Yeah, so they were taken at two different snapshots in time. If you would take a snapshot of our financial statement today, as the commissioner has alluded to, our biggest revenue months are ahead of us. So it would be a totally different picture today and would be most likely a higher amount based on the invoices that we've sent out to date.
Okay, got
So
it.
it is very dependent on timing.
When does the department receive its funding from assessments, and would you propose any changes to the current structure?
We have many different types of fees. Some are paid annually, some are collected monthly. We have always been on kind of the same cycle with our biggest fees are collected in the months of February, March, and April. That's why our biggest revenue collection months are ahead of us. But because a lot of our renewals are on an annual basis, I don't think that we are able to move the timing of it.
Yeah, we've looked at the fees before, too, to compare how we rank with other states, and our fees are generally consistent. I think if we were to look at certain fees, it may be in the appointment fees space, but today, I think we're able to fully fund ourselves and give back significant amounts of money to the general fund, so I don't feel like we're in a position where we need to either reschedule or increase fees at this time.
Okay, thank you. I appreciate your testimony.
Thank you.
Thank the gentlelady, Representative Friel.
Thank you, Chairman, and thank you, Commissioner, for being here today. I want to talk a little bit about denial of claims with insurance companies for Pennsylvania families. And I know in beginning in 2024, the Department of Insurance was required to establish a process for review of, a third-party review of claims under denial. And I'm not surprised to learn that more than 50% of those appeals have been successful, meaning half of the times when we're denied sometimes life-saving coverage and it's deemed medically necessary, our insurance companies are denying that medical coverage to Pennsylvania. Can you talk a little bit about that process and what the results of that have been?
Yeah, you're absolutely right, Representative, and I think when we've released this report now, it is a significant concern to us and one that we're studying on the market conduct side, because as you mentioned, with the act starting in 2024, we brought in the external review oversight. Prior to 2024, we were one of a handful of states that still had an external review process that was governed by the federal government. One of the arguments made to bring it to the state was that we would see trends and issues in real time. We'd be able to kind of get an understanding of what issues may need an additional focus on. And we were able to pull together kind of this additional reporting to not only inform consumers, but inform companies and inform us of the process going forward. And to your point, in order to get to external review, generally you've gone through 2 levels of internal review at the company. And the company stands by its initial adverse decision. And then that person is made aware of the rights to come to the department. They'll come through our consumer side, working with our policy analysis, our Bureau of Managed Care, and those external reviews will be sent out to an IRO, an independent review organization, to review all of the material and give an independent position. So far, after this first year, it is over 50%. It's just at like 50.6% that have been overturned. And to us, that number is too high. To your point, too few people understand that they can appeal a health insurance complaint, period, much less take the time to go through an internal review process, be discouraged twice, and then continue to come back to the department to fight. So, I mean, the message, I think, for the consumer is A, PID is here to help. B, continue to appeal. Don't necessarily take that denial as a denial and walk away, because oftentimes you will end up winning. And that's something that we need to take back on our side to look at when a company is wrong at a 50% plus clip. There are thousands of people then that may have been in that position and didn't know their appeal rights in the first place.
Yeah, and I think that's a really valid point, is that's just of the folks that took it to that level. And I would imagine that the financial benefit to denying claims, because a lot of folks will drop out and just give up, is there something that can be done to penalize insurance companies that are disingenuously, and I would say not following the best medical practices here, in denying claims for financial reasons and putting our health of Pennsylvanians at risk? And I'm going to tell you one story, and the reason I know about this. I had a little boy, 5 years old, that was diagnosed with a life-changing fatal disease. There is a treatment process. He went to the University of Pennsylvania. He was the 10th child that diagnosed at Penn and treated with a potential, or given this treatment option. 9 of these children with this fatal disease were denied by the same insurance company, took it to appeal. Every one of them was overturned. He's the 10th. He walks in, he's denied. How is that morally right? How are we allowing children to be denied coverage of life-saving medical necessary treatment so somebody can make money? How can we stop that?
Yeah, I think that's the key point, Representative, and that's what my market conduct team is going to be able to do, is to be able to, now that we actually have this data far sooner than we'd be able to have in the past, it's going to let us drill down and see what companies are doing, why are they doing it, and be able to potentially take action if they're not honoring the policy and the benefits under the policy, because overturned means you should have covered it under the policy that the department has approved. So if we see a pattern or practice where a company continues to deny something that they should otherwise coverage, that can subject them to restitution, fines, penalties, and it's something that my market conduct team, led by Dave in the back, will be looking at as we get more data and look forward in this space. Because I think part of it also, in that same law, it amended prior authorization processes. I think today, commercial insurers probably prior auth too often. I think you saw yesterday's announcement, United Healthcare announced that they're going to look at reducing prior auths by a goal of 10%. We are going to start looking, and it was in this act, at the number of times or the number of services that we're prior authing for, and try to get a better grasp of the prior auth process as well, because many people move down those paths in the appeal process because their prior auth is denied at the front end. And to the extent that that's not an appropriate denial, that's something that I think the regulatory part of PID needs to look at.
Thank you very much. I know my time expired. I just want to leave you with the thought. At some point, this is people's lives, and sometimes these are life-saving therapies. And I think beyond money, we should look at the criminality of this if it falls to where someone has passed away because we've denied coverage improperly. Thank you.
Thank you, gentlemen. Representative Marcel.
Thank you, Mr. Chairman. Thank you very much for being here today. I wanted to follow up on the Insurance Regulation and Oversight Fund questions that Representative Brown just asked you. I was looking at just some of the numbers. I guess it's in the governor's executive budget document. And essentially for last year, the amount that was returned to the general fund was 16.2. And this year is estimated for 5.1. And then in 2023-24, it was 21. So I'm just trying to figure out like where you're getting 21 for the estimated budget for this year, because last year it wasn't 21. It was for the prior budget. So I'm just trying to figure out like kind of where that discrepancy might be.
Sure, and I think one part when we talk about the give back to the general fund that's important is we're talking about the number that's on top of what I already give back. So in 21, we gave back 53 million. In 22, we gave back 63 million. 23, we're giving back 66 million. So because that's the 50%, and then it's what you're talking about is the difference between what we're bringing in and what we spent the prior year, and that's the difference that we give back to the general fund in addition to what
So
we're
you're basically just
already
spending more
required to
money?
give
Is that what
back.
you're trying to say? Like, that's why there's less money going to the general fund, is because the agency is spending more money operating?
No, it depends both on kind of what we bring in, because we're capped again at the
But
prior
you're
year.
estimating
but then
21 million.
21 to go in.
So what happens is we've actually year over year given in totality more money back to the general fund. What we're really talking about is how it comes back. So every month, all of the fees that are collected by the insurance department go to the general fund, and the general fund retains 50% of those fees and 100% of the fines. At the end of the year, there is a reconciliation process that, because of Act 46 of 2013, only allows the insurance department to keep whatever it spent for its appropriated budget the prior year. Any excess cash we have in the bank is returned to the general fund.
And when
Therefore-
is that information available in terms of the numbers?
Well, this
Typically
year,
during-
we already gave back $16.2 million in July for the previous year.
Okay, thank you, I
So-
appreciate that. So I had a question, you were talking about the fees. I was reading in your testimony that on a percentage basis, we have one of the lowest insurance department operating budgets in the country, which sounds like that's a great statistic. But then on the other side, our license fees are much higher than other states. So I was looking at it, and New York, which is obviously a big insurance market, Ohio and West Virginia are all lower than ours. And so why are our license fees so much higher? Why are we kind of leading, maybe in a bad way, essentially, that our fees are much higher than in other states?
You know, I don't think they are if you look at them as a whole, because there's both a licensing fee and an appointment fee that all states have. So some states may have higher appointment fees, like we're actually low
Well,
on
when
the
I was looking
appointment
at
fee
the
side.
numbers, it seemed like overall, not only is that license fee high, but there are other fees that are higher too. So when you look at the total number, it actually is higher for those states. Would you be able to provide a better explanation of like why, even when you separate the numbers out, why your numbers are so much higher?
Yeah, but our appointment fee is actually lower than most other states in the Northeast. So we can give you a breakdown of how licensing fee lines up versus appointment fee, because each state is going to balance that differently depending on how that state department is budgeted. So we come up with that same number, and we actually, every state, quote unquote, retaliates, right? So if another state has a higher licensing fee, that's what the fee becomes. And when our fee is higher, then New York would charge our fee to anyone from Pennsylvania that comes into New York, for instance. But we can get you a map of like who charges what.
I'm happy to provide some of the numbers that I was looking at, because they looked as if all of the numbers stacked up they were still much higher than other states. I'm going to move on now to, excuse me, the Insurance Regulation Oversight Fund. Essentially, within the GGO, there's an increase of 9.8%, which includes funding to continue the operations of the department and a new initiative. The initiative is $711,000 to implement Act 77 of 2024, which concerned the regulation of PBMs. So what's involved with this regulation? What will the increase be used for?
Yeah, that's the same question from the first gentleman. It's the 8 new positions. So I'll have some people looking at the forms.
And I know I'm out of time, so I apologize, but I wanted to find out about, are they employees?
Yes, it's 8 staff positions.
I'll submit my additional questions to you after this, but thank you for your time.
Thanks.
Thank the gentlelady, Representative Siegel.
Thank you, Chairman. Thank you, Commissioner Humphreys, for you and your team joining us today. I want to talk a little bit about the potential expiration of the federal subsidies that were extended under the Biden administration. I think it's one of the unspoken victories and legislative achievements of the Biden administration, that Democratic trifecta, was that both during the American Rescue Plan and then the corresponding Inflation Reduction Act, there was a commitment to holding folks' premiums at 8.5% of their annual income. Obviously, that extension is pushed back through the end of 2025, but if that federal extension is not continued and expires, we're going to see some considerable increases, I believe, in Pennsylvania families' premiums. And the example I think that is most telling is a couple making $80,000 a year who are currently paying $600 a month. If those premiums expire, they'll then pay $2,400 a month. And I can't think of a more devastating cost increase for Pennsylvania healthcare consumers than that. But to put an even finer point on it is for families making below $30,000 a year, they're going to see a 117% increase, which is $153 a month. So when we talk about holding costs down for consumers and folks here in Pennsylvania, I can't think of a better way than making sure those subsidies are extended. Can you just talk a little bit about the impact that that'll have on consumers across Pennsylvania and its impact on PENNIE overall?
Sure. So as a quick introduction, I'm Devin Charlie, the Executive Director of PENNIE, the health insurance marketplace here in PA. We are a separate agency from Insurance Department and happy to be here to answer questions like this one. So we are very concerned about the expiration of the enhanced premium tax credits. When those went into place, we saw a nearly 50% jump in enrollment. Those additional tax credits cut costs in half for PENNIE enrollees receiving tax credits. If those were to go away, if Congress does not act to extend them beyond 2025, PENNIE enrollees would be looking at an 82% premium increase. In many areas, for example, in rural areas, that's double. They would see a doubling of their costs. So one of the largest barriers to enrollment that we hear from uninsured Pennsylvanians and also from our current enrollees is that there's still a high concern about cost, about the premiums, about the out-of-pocket costs, and the enhanced premium tax credits really help address both. It helps reduce the premiums, it allows people to buy up to higher level plans with lower out-of-pocket costs, reducing barriers to actually receiving care. So we are very concerned that if they are not extended, that we could see a reversion back to the enrollment levels we saw before. We are currently at record levels of enrollment. 500,000 Pennsylvanians are covered.
Yeah, and it seems like from what I can gather that the folks that will be affected by the expiration of those subsidies, it's about 435,000 enrollees out of that 500,000. So that's a considerable percentage of the folks that are enrolled in PENNIE. Can you just talk a little bit about how that might affect individual purchasing of plans, what kind of drop-off you anticipate, and how you're planning from a contingency perspective should that happen?
Yeah, absolutely. So it's going to be a tough decision for people who are facing 82% increases, doubling of increases of what they're paying today. So they will be faced with a decision of whether to buy a lower level of coverage and seeing their deductibles increase, for example, presenting barriers to actually receiving care. And we also, based on our research and our surveys of our current enrollees, many, about 60%, think the coverage is barely affordable. So they're kind of on the edge of affordability already. So if they see premium increases like that, we do think it's very likely that many will not be able to fit it into their budget. 80% of our enrollees make $60,000 or less. So it's, budgets are, spread across many things. And so we are concerned that many of them would unfortunately make the decision to go uninsured, which means, puts themselves at risk of medical debt in case of an emergency or delaying care for conditions that they know they have.
Do you have an estimate as to how many you believe will drop off potentially?
We don't have, it's really hard to predict because nothing like this has ever happened, but we are concerned that we would revert back to the numbers before, which would be over 150,000 Pennsylvanians who might decide to, or be forced to drop coverage.
So just to be clear for the sake of accuracy, because I think this is, should they expire, going to frustrate a tremendous amount of Pennsylvanians, the responsibility lays in Congress's hands, right? This is a federal decision. It is incumbent on the new trifecta in DC to make the decision to continue these subsidies.
That's correct. Under current law, they expire at the end of this year.
Right, and what you're saying is if Congress, federal government, does not act, roughly 150,000 Pennsylvanians could choose to forego buying health insurance because it's too cost prohibitive, which means they are likely going to accrue medical debt. They're going to be incapable of getting critical care that they need, which means they're going to forego access to prescription drugs, potentially ignoring chronic conditions, and then potentially costing more down the line should they rely on, potentially they need Medicaid eventually. And then at the end of the day, we're going to see double-digit increases for folks all across Pennsylvania in terms of costs overall. So it's going to wind up costing Pennsylvania families even more to buy basic access to health care.
Yes, that is our concern.
Okay, thank you.
Chair, thanks. Gentleman recognizes Representative Olsummer.
Thank you, Mr. Chairman. Commissioner Humphreys, I'm going to focus a little bit on essential health benefits here. The Affordable Care Act requires health plans to have minimal level of coverage, known as essential health benefits. Pennsylvania has enacted several mandates over the years that go above the minimum level of coverage set by the federal government. When that happens, the ACA says that states could be responsible for paying that coverage. I understand the federal government has never enforced this provision, but what would happen if it did?
Yeah, I think, Representative, that's a great question, because I don't think the federal government has been clear on when and how you would enforce that, because the deferral payments, actually defraying the cost of the mandate is what it would be either to enrolled individuals or to insurance companies. So it wouldn't be necessarily a penalty that you'd actually have to pay to the federal government. So they've never given guidance on how that is envisioned, and there's a number of exceptions to the general defraying the cost of a mandate, because there's payment mandates, there's provider type mandates that wouldn't necessarily need to be defrayed. So there's a lot more clarity that I think CMS would have to provide before you would get to a point where there's a requirement to defray the cost of the mandate.
I'm a licensed insurance agent and proud practicing agent for the past 36 years, and my experience has been that those additional costs borne by the insurance companies roll downhill. Who would be responsible for paying these added benefit costs then?
Under the Affordable Care Act, it just says the state. It doesn't clarify who within the state, but it just says the state would be required to defray the cost of a new benefit mandate after 2012.
So the taxpayers or the policyholders?
Yes, potentially that's how you would make up the state payment.
How does the benchmark plan for Pennsylvania essential health benefits compare to the essential health benefits plan of other states?
I think every state is a little bit different. Some have been proactive in determining what their benefit plan should look like. I recently saw, for instance, the state of North Dakota expanded its EHB to include a number of new benefit mandates, including, I think, a mandate on GLP-1 drugs. I think it would be hard, but it's comparable to look at different states in pulling together kind of, there's obviously the common core of essential health benefits of kind of your hospitalization, your emergencies, your providers, your mental health parity, but within each benefit, I think that the specific coverages will vary from state to state.
Thank you. What impact do mandated benefits have on premium costs, especially for employers and individuals who do not qualify for the federal ACA subsidies?
It's really going to be different for any benefit mandate. I mean, some may be available at no additional cost to an insurer. Some may require additional costs, which would be potentially built into a premium. Now, some of that may ultimately be deferred by a benefit that potentially it's an earlier screening. So you spend on the screening, you take action earlier, the downstream impacts of that actually could reduce costs from an overall basis. But it's really a mandate by mandate review that would need to take place to determine the cost of each particular new mandate.
Are there alternative strategies that the General Assembly could pursue to improve access to care while containing costs, rather than relying on new insurance mandates?
Well, I think one of the measures that the governor called for in his budget address, the all-payer claims database, will improve transparency in the health insurance space. I mean, we talk about major purchases that individuals make. Very few do you know as little information as you do is going into a medical appointment or a medical procedure. The idea with an APCD would be to help lift up information for policyholders that could ultimately drive the cost of health care on the whole, because potentially I would be looking at the lower cost, better outcome provider than one that today I'm going to because I have no idea the difference in cost, no idea the difference in quality between providers. So I think that's one way that you could bring costs out so that companies and individuals are making more cost-conscious decisions or considering that as part of their decision-making process.
Thank you. Thank you. When a new health insurance mandate is passed by the legislature and enacted by the governor, those changes only impact the fully insured commercial marketplace. What percentage of the marketplace is made up by those plans?
Yeah, that depends. I mean, you could write a mandate that would apply to Medicaid, for instance, but when it's just the fully insured market, it's about 20 to 25% of the insured lives in Pennsylvania. That's the market that we are responsible for regulating.
Okay, my time has expired. Thank you, Mr. Chairman.
Thank you, gentlemen. Representative Salisbury.
Thank you, Chairman. Good morning. I'm going to build right off of the previous questioner's line of thought, and I'd like to talk about the Affordable Care Act a little bit. What types of impacts could we expect modifications to the Affordable Care Act, which some people like to call Obamacare? How could that be expected to impact Pennsylvanians? I wonder if you could talk a little bit about how Pennsylvanians might look at having their lives modified with, for example, the requirement that children who are under the age of 26 can stay on to their parents' health insurance, issues relating to pre-existing conditions, lifetime caps, that sort of thing.
Yeah, thank you, Representative. I mean, those are core benefits that we have grown accustomed to utilizing, and there's a number of preventive services that are now available for no cost. If you were to wipe away, for instance, a pre-existing condition, the prohibition on using pre-existing conditions, all my tests that I've bought in because I've now got coverage that'll cover preventive services, we have identified different illnesses or conditions earlier. If that were to go away tomorrow, then theoretically an insurer could use that in the underwriting process in the future and carve out its benefit that it would sell you based on the pre-existing condition that you now have. It would have individuals, as you mentioned, that are under 26, would put them in a position that they could no longer stay on their parents' policy. So they'd be coming to PENNIE, which is always a great option, but may not as affordable as what they're currently paying or that their parents are paying just to add a dependent. And there's also no minimum or no maximum annual or lifetime limits. So you couldn't reach a cap at which point your insurer would say, you know, we've already spent $100,000 on you for this benefit, we're no longer going to provide coverage. So those core benefits are really what I think has contributed to so many more people looking to PENNIE for coverage, more people coming to the market for coverage, because compared to a policy from 20 years ago, it's far more robust. It covers more at no cost to me as the insured. And for that to go away, I think would pose major challenges for many Pennsylvania families.
And I understand that there's some proposed legislation that would align the state coverage with the ACA coverage. I'm curious what your thoughts are about that. I'm curious also what that looks like when people are coming more toward PENNIE to get some of these benefits. How does that impact us budgetarily?
Yeah, we from an administration standpoint strongly support the ACA mirroring package. I think it may be coming up in the House Insurance Committee in the next week or so. It's one that we've worked with staff, we've worked with all representatives kind of across the aisle as there's been questions to make sure that the legislation really lines up with a continuing of the ACA benefits. So there's triggers in there, so should a provision be repealed or replaced, then that's when it would come into place. But otherwise, we do think it's really important to make sure those benefits continue. And I'm sorry, I missed the PENNIE part of the question.
Oh, you mentioned earlier in one of your responses that more people are coming to PENNIE for getting some of these benefits and needs. How does that impact us on a state budget level? Sorry, I combined two things into one question there.
So I would just note from the PENNIE enrollee perspective, when we've surveyed enrollees, they consider these benefits to be one of the most important parts of the coverage, and really reinforcing that is why they're coming to PENNIE for the quality of coverage, that they know they have those maximum consumer protections. And on the budget side, I mean, if it's mirroring what the plans currently are, I don't think it would have one vote.
Yeah, certainly not on the IROF side or what the PID team would need to continue regulating the products, because it would be an expectation of the policies looking like they do today. So we would continue to regulate them on a go-forward basis like we do today.
And I just wanted to say as well, I have seen some of the efforts to publicize the PENNIE program. I think some people still don't quite understand what it is, but I have seen some billboards and advertisements and things going out about it. So I wanted to thank you for trying to make that more known in the Commonwealth, because I think it's a great program that people can have opportunity to use. So thank you very much.
Thank you.
Thank the gentlelady. Representative Coots.
Thank you, Chairman. Good morning, Commissioner. Thank you so much for joining us today. I want to ask about rising auto insurance costs, inflationary pressures. As you know, auto insurance premiums in Pennsylvania continue to rise. I myself just got an email today from my agent advising me of a $37 a month increase that I'm going to be getting and having to pay here today. And they're rising due to multiple inflationary factors, I would say including, but not limited to, rising vehicle repair costs, increased litigation costs, and whatnot. Now, the department frequently highlights the amount of money it has saved consumers by approving lower than requested rate increases, not unlike what the PUC does with public utilities. But this does not address the underlying costs of premium inflation. Commissioner, can you tell me, what does the insurance department identify as the primary cost drivers behind these increasing auto insurance premiums in Pennsylvania?
Yeah, I think, Representative, you're exactly right. A lot of it is the cost of new autos is increasing over the several years. The cost of auto parts is increasing. Driving, which slowed during the COVID period, so you actually saw rates stay put largely through COVID because driving slowed, the rates slowed, the companies were issuing rebates. But as we came out of COVID, driving picked up, and we were faced with the inflationary pressures of kind of the cost piece and the new car piece. So we have seen, I think, 15, 13%. We're down to 8%. And actually, I think finally, Representative, we've reached a point where we are stabilizing again. We actually had 4 companies towards the end of last year take advantage of a regulation that allows them to immediately reduce insurance rates. And we just approved a reduction of upwards of 12% for, I think the company has 130,000 policyholders in Pennsylvania. So we've started to see that plateau and now potentially see a downward trend that I think is very positive. Now, the one caveat I would say that is very new and still needs to be analyzed in a more full depth. I've seen the auto industry statements already is potentially the impact on tariffs. As a number of auto parts come in from Mexico, they come in from Canada.
And Commissioner, let me in my limited time, let me shift back. We talked about those root causes that we've seen as we're coming out of COVID. It's been done for years now. But now, let me ask you this. In your estimation, how significant of a factor are legal costs, including an uptick in frequency of lawsuits and settlement amounts?
I mean, I think the cost of doing business includes legal judgments and others, but I don't think that we've seen that mentioned prominently in insurance rate filings. I can go back and check with the actuary.
And I'm glad you mentioned the cost of doing business, because I think as the governor talks about wanting to make Pennsylvania more competitive for business, seeing as though we have a new report came out today, we're the 5th highest tax burden in the state, and we're also the top judicial hellhole in the entire country. So I think these are things we need to address. So let me ask this, Commissioner, what steps, if any, should the General Assembly consider to curb pressures on auto insurance, such as tort reform measures and measures to reduce fraud?
Well, again, and I think when you look at the filings, Representative, you're not going to see those issues at the top of why the companies are asking for rate increase. They're not citing to those issues as the lead drivers of the cost. It is replacement, it's repair, it's parts that are really the leading drivers of auto insurance increases. And that's kind of outside of, I think, the scope of what we can do in that process. Certainly, we can go back and we'll continue to push on our side as we get these rate increase requests, and we can look into and try to bring in some of these issues that you've mentioned this morning and try to kind of flesh that out more when we get these filings coming in to try to delineate how much of their increase is associated with kind of outside of the car, the driver, the parts.
And I appreciate that response, and I think what you're getting at is a larger issue, which is it's the same thing with health insurance. We're trying to mask the cost with subsidies while not addressing root causes as to why the cost of healthcare is going up. It's the same thing with the auto insurance industry. Right now, we're focused on rate increase requests and trying to come back, and I think it's a little misleading to say what you're saving consumers without looking at the root causes of the inflationary pressure. So I think we need to go as a General Assembly and look at that and work with your department to ensure that, one, we're reducing fraud, and two, we're looking at tort reform measures that are going to be part of those inflationary root causes that are causing auto insurance to go up, so we can make it safer and more affordable for people to drive and own a vehicle. And I think that's going to have broad-reaching implications for our economy. Thank you for being here, and I thank the chairman for the time.
Thank the gentleman. Representative Mays.
Thank you, Chair Harris. Good morning to all of you who are here with us today. Thank you, Commissioner. Thank you, Executive Director, for being here. My line of questioning is about how can we have conversations and take action around issues primarily impacting women and our families in the Commonwealth. I understand there is a survey that is exploring how we can bring greater coverage for the important issues of doula coverage, IVF, and other reproductive assisted technologies, human breast milk storage, breast cancer, and so many other issues that are truly impacting women. The Pennsylvania Omnibus is a legislative package introduced by the Pennsylvania Black Maternal Health Caucus. While we have been able to make strides when it comes to Medicaid, like doula coverage, we haven't been able to make those same strides in the private market or on the private insurance side. So last year, my colleague Rep. Steele introduced House Bill 2138, which was about blood pressure cuffs. Blood pressure cuffs are a way for moms to manage their blood pressure, to intervene against deadly conditions such as preeclampsia. So between blood pressure cuffs, doula coverage again, IVF, breast cancer, as well as human breast milk storage, how can the Department of Insurance work to ensure that that women have coverages when they need it, whether they're giving birth or whether they're living their lives? I would love to hear your thoughts, strategies, and opportunities for us to work together.
Yeah, appreciate the question, Representative, and certainly it's a top priority of us to make sure people understand the benefits that they have today. And we're actually, to your point on the survey, and then I would hope in the next couple of weeks, we'll be able to come out with a survey that's focused on women's preventive services. So, I mean, what we're trying to do in that survey is to understand where the pain points are in the process so that we can help elevate both the discussion and awareness of potential benefits, because I think some of the issues that we've seen in some of the national studies that look at preventive services, who's getting them, who's actually paying for preventative services when they shouldn't be paying because it should be covered at 100%, is what we want to get to the bottom of. It really is focused on those preventive benefits, many of those that you mentioned today, and also as part of our rate and form filing process, we've incorporated many of these elements of issues that we hear a lot, whether it's from your offices, from consumers in general, in what we call a path template that really tries to identify the core benefits in a policy. So then we come out with, actually last year we came out with our first QHP transparency report that really tried to give people an understanding of what benefits they currently have, and really go company by company and just really explain what those benefits look like. So I think you'll see with the survey that we're going out to try to hear more from the communities on where we need to focus our attention in terms of awareness, and would be glad to work with you once those results start to come in to see how we can partner in reaching different communities out across Pennsylvania to make sure people are getting the benefits of what's covered under their policies.
So what's the survey length of time, when you expect to see results, and when will they be shared with the public?
Yeah, the survey is in a draft stage right now, and kind of, I think, working collectively with some legislators. There was an ask that we look at have translation services. So right now we're going through the process of trying to get the survey translated before we roll it out. I would think in the next several weeks we'll be able to get it out, and would love to work with you and your team and the caucus on just reaching individuals, because the more survey responses that we get, the more informed that we are and can help plan those next stages. And the next stages are going to be both an awareness campaign that I think will be informed from the survey, but also generally focused on preventive services. And then also on the rate and form filing side, we're going to be issuing an RFP to get to like best practice type of language, looking at other states, how they explain benefits that we can work with our companies on to maybe take advantage of this language to build into the policy so everybody understands what's covered in greater depth.
Well, thank you for that. The women of this Commonwealth, we certainly have had pain points for many years when it comes to medical conditions that impact us specifically. And I think this is a great opportunity for us to partner and to work together. And we invite you to join us for Black Maternal Health Week, April 14th through the 16th in Pittsburgh. Thank you so much, Chair. Thank you, Commissioner. And thank you all for being here today.
Thank the gentlelady. Representative Nelson.
Thank you, Mr. Chair. Welcome, Commissioner. I have a couple of questions today. They're really focused more on ways that we can benefit our constituents and consumers throughout the state. And I'd like to start out by, thanking the department. We really appreciated, the commission coming out to Westmoreland County. Last session, we had a pretty severe surprise flood event, and there was awareness, a press conference after the fact, because many of those families, they weren't in flood districts, and they didn't have flood insurance. And it was really devastating. We are, blue collar county, and families not having any insurance for an event like that really turned their lives upside down. And your office had the flood insurance premium task force that generated about 9 recommendations. One of those legislatively, we implemented like a continuing education that we legislatively had completed. Are there some of those that can be implemented by your department without making changes in the law?
Yeah, Representative, really appreciate the call out on flood, because it just is devastating for so many families. And when my team goes out after every flood event, the first thing we hear from families is, I thought my homeowner's insurance covered flood, which we know it doesn't. So we're trying to get the word out. And to your point, the bipartisan legislation, we moved it so quickly last year. Really appreciate the legislators for working on that one, because what that will do is part of an insurance agent's 24 hours of every 2-year continuing education, 2 of those hours now have to be flood insurance. So more people are talking about flood, more people are learning about flood. Another recommendation that we've already acted on within the department is the creation of a flood ombudsman position. Somebody that could really spearhead all of the department's efforts, work very closely with PEMA, work very closely with FEMA, work with our outreach, our new outreach office to get into communities to talk about flood, to explain flood.
Great.
We would love to partner with you in getting out there more often.
Yeah, we were hit pretty hard, and those families that experience that, it would be great to kind of spread that word proactively. Of the recommendations, those 8 other priorities, are there certain legislative priorities, in your eyes, that we should do this session, like your top 2?
Yeah, I think, and we're talking to legislators about, I think one in particular is the enhanced disclosures from a property seller standpoint. I think we were rated by a national association as like a C or a D in what we provide. Neighboring states are up at an A and a B. So we've worked with legislative staff on crafting a Pennsylvania version of that, so more information is known more quickly in the home buying process, because we think, and we learned through that task force, that oftentimes people weren't finding out about flood history or flood risk until you're almost ready to sign papers at closing.
Great.
We think that needs to come sooner in that process.
I look forward to working with the department, to be able to help advance that legislation. I'd like to pivot now to a totally different subject, vehicle insurance, and specifically, it's more of a PennDOT related item, but I'd really interested in getting the department's position on OLV, the online verification. We have probably an easy 30 constituents a year that come into our office because when somebody changes their car insurance, notification gets sent to PennDOT that their insurance was canceled, but not necessarily that it was immediately picked up. And then PennDOT sends a letter. If they don't respond, it's a $500 fine. PennDOT suspends their registration. About 16 states have passed a faster, more efficient online process of notification. And just wondering, is your office supportive of the online verification to be able to streamline this for Pennsylvania's drivers?
I think that conversation really pivoted towards the online verification system last year. I think we need a little bit more time to coordinate with PennDOT and kind of talk through this issue. I know Dave has handled this issue a number of times for our team when we get similar complaints of people getting the scary notice from PennDOT potentially after they have in fact renewed their coverage. So we're glad to work with PennDOT, we're glad to work with you and to look at what that online verification system means. I came here from the Tennessee Insurance Department where we had adopted that kind of on my way out, so I don't really have the hands-on experience with it, but would be open to working through it with PennDOT and the administration colleagues.
Okay, thank you, Commissioner. Thank you, Mr. Chair.
Thank the gentleman, Representative Young.
Good morning, everybody. Happy Women's History Month is what I want to start with saying. So thank you all for being here. This is definitely a pivotal time in history as we are all in government. I want to start off with federal subsidies. They're helpful to the individuals who pay the premiums. However, these federal subsidies are in jeopardy. And I'm not really understanding why, because it doesn't require Congress to make any changes in the structure of the funding, but yet they're being threatened. And, the current structure is very important for the stabilization of our healthcare systems, and it directly impacts the people in the Commonwealth. So my question is really around, should these federal subsidies be taken away unnecessarily, my opinion? Can you explain the process that the department used to review and approve insurance rate increases?
Yeah, so around May of every year, and we will soon be putting out guidance for our expectations on the filing process for companies. So typically it's in the May timeframe that companies submit to us both the policy forms and the rates for the following year. So that'll come in. We will, in all likelihood this year, be asking companies to submit two different kind of a certain exhibit that comes along with the filing. One would suggest that the subsidies are continued. One would be suggestive that they don't continue, and build the rates around kind of both circumstances so that as we go through the process, which really spans the spring and through the summer of going back and forth with the companies, we'll look at their expectations, we'll go back and forth on certain past experience and future expectations before we would be comfortable coming up to approve a rate later in the fall. And now, obviously, I think Devin and I would both love to see Congress act sooner than later, so we have that certainty on the front end. There is a few months from May into maybe the early to late summer that it's still functionally available to us that we could approve a rate that is inclusive of the expanded subsidies, for instance, because I think and Devin made this point earlier, if subsidies go away, the risk pool is going to get worse. We're going to expect fewer individuals in the market. Those that stay in the market need their health insurance. They will spend every penny that they can save to make sure that they continue to have that coverage, which will impact the full pool in the mortality or morbidity assumptions as part of the rate-making process. So that's really kind of how we go from May to August. And Devin, I don't know if you wanted to chime in on the subsidy side as well.
Yeah, briefly, it was just, echo that we are very concerned about the enhanced subsidies ending at the end of this year. There are baseline subsidies that have been in place since 2014, and those would continue, so people wouldn't lose all of their subsidies. But what we've seen, again, is that this additional amount, which is essentially $600 million a year to Pennsylvanians in direct premium reductions, has made a huge difference in increasing enrollment and making coverage accessible.
Thank you for that. I just want to say that the outrage will be felt by more than just you and Devin. It will be felt by everybody who really understands that healthcare is a human right. And so for that to be threatened, we all should be offended by that. So can you tell us how customers can save because of this proposed process? Outside of obviously calling their federal Congress people to advocate on why they should not touch that particular system, but outside of calling the Congress, the Republican members on the Congress, can you also help us communicate to our constituents how they can possibly be saving some dollars while going through this process of uncertainty?
Yeah, I mean, I think that would really come into play when open enrollment starts, in around the October-November timeframe, when we would start communicating to consumers, to Pennsylvanians, that their rates could be going up, and we would know at that time. If that does happen, if the enhanced tax credits are not extended and premiums do increase on average 82%, I think consumers could shop around, and what that would really mean is buying potentially to a lower level of coverage. So, they'd still be able to maintain coverage, but their deductibles would go up. They would increase a lot. I think our concern is that that's not workable for a lot of people from a budget perspective to either pay more or in premium or to pay more in out-of-pocket costs. So that is why we're so concerned around the extension.
Thank you so much.
Thank the gentlelady, Representative Krupa.
Thank you, Mr. Chair, and thank you to the Commissioner and all the testifiers for being here today. Welcome. I want to take a moment and talk about your work-from-home policy. Government exists to serve the people, not itself. Taxpayers expect efficiency, not excuses. For many of my constituents, it feels like state agencies are running their lives through slow responses and endless red tape. The private sector has largely returned to the office in person because businesses know productivity suffers when employees aren't fully engaged. What percentage of the insurance department's workforce is currently working remotely, and how often are they required to be physically present in the office?
Yeah, so I have 2% of my staff is full-time telework, with about 80% is part-time telework, which generally will range somewhere between a few days a week, 3-4 days a week, to a couple of times a month, maybe once a month if they come in for a collaboration day. I think part of the misleading piece in this data, though, is we had a number of people that were full-time telework before we have an examination staff. In all insurance departments across the country, their financial examiners generally are working from home. So they're home headquartered in that case because their role has been to travel to insurance companies. So it's not necessarily coming from Harrisburg. As you know, we have insurance companies that are headquartered everywhere from Erie to Philadelphia. So, I mean, it's driving to those areas, coming in, doing their exam work on site at insurance companies. So, I mean, a substantial number of our team and staff was remote before COVID started, and this was kind of coming back.
There's a specific distinction between going out into the field and working from your home. How are you tracking that distinction? So you just said that 100% total of your staff is doing some level of remote work. What percentage of that is just doing field work but then reporting to an office versus doing their office work from their home location?
No, I'm sorry, 16% don't do telework at all. So
okay.
I do have staff that's always in the office. Our executive team, our leadership team is also in the office 3 to 4 days a week. It's some of our program staff that are in that position of the significant part-time telework. And we do have telework agreements with every one of them that talks about what days they come in, when they work from home, and kind of a robust oversight of kind of activities and work from home when they work from home.
So my understanding is that there's a pretty massive backlog within the department, and there are many filings that are pending. What productivity matrix does the department use to assess the effectiveness of remote work, and how do those compare to pre-pandemic and in-office performance? And to circle back to my comment about the backlogs, you know, how are you monitoring the backlogs, the length of time that it takes for those files to be updated and responded to?
I'm not aware of significant backlogs that we have. On the company licensing side, we have probably a couple of dozen companies in the process of going through, but every company, like when it comes into Pennsylvania to write insurance or wants to form a new company, there's a give and take. And I think at each point in the department, there is a give and take. So companies also that file rates and forms, there's a give and take. So they'll make a filing with us, we'll ask them questions. I can't control how quickly they respond to us, so I don't think we have a backlog that's not manageable. And in each of those areas, we do have separate systems that oversee the volume of what we have and can look at it from even, like on the complaint side, Dave's team, again, we can break it down by a consumer investigator, how many cases they have in front of them. They have timelines for each case that they're supposed to look at and get a response out to those consumers. So we are able to oversee to make sure we're actually being more responsive than we've been in the past.
What's the most common filing that you have that would require a department response? What is the current backlog, and what is the average response time from the date of the request to the date that it's marked complete within the system?
It's going to be different for each one. So
I'm talking about your most commonly filed one. What is your most commonly filed?
Commonly filed is probably an insurance producer application, would be my guess, because we license hundreds of thousands of individuals as insurance producers.
So my time is almost up. Government should be working for the people, not at their convenience. What steps are you taking to ensure that every claim, inquiry, and regulatory process is handled as quickly and as efficiently as possible, regardless of where they're working?
Yeah, most of those, I mentioned the producer licensing is probably the highest volume. Most of those turn around in a day. And then we, through our leadership team, are looking at complaints, we're looking at producer licensing, we're looking at company licensing regularly. And I get reports up on kind of the volume that we currently have, because we do strive to provide service as soon as we can and turn around consumer complaints, which are most important. Is when consumers have complaints with us, and we're turning those around in a matter of 2 to 4 weeks. And working through that process with the companies.
Thank you so much for your testimony.
Thank the gentlelady, Representative Abney.
Thank you, Chairman Harris. Thank you, Commissioner and Director and your team for being here. I wanted to really quickly talk a little bit about the Affordability Assistance Program. I know that there is a request or a need for $50 million, whether that comes from the General Assembly or through another means that is currently caught up in litigation right now. But could you tell us a little bit about what that program is and what the benefit of it would be if we're able to get the funding for it?
Sure, absolutely. So I would start off by saying that one of the largest cost barriers that we hear from the uninsured in Pennsylvania that we've directly surveyed is cost. So 80% do not purchase coverage because it's too expensive. And then 60% of our current enrollees are just on the threshold of thinking it's too unaffordable. So we have a lot of people who are just barely or not affording coverage. And so the state affordability program would make strides in making coverage more affordable, more accessible to those who are uninsured. And it would also have benefits for current enrollees, allowing them to buy up to richer benefits, which would reduce their out-of-pocket costs and allow them to access care more readily. So specifically, it would benefit incomes below $45,000, so between $22,000 and $45,000. And it would, again, affect sort of current enrollees and new ones. And a little bit about what it would allow from the cost-sharing perspective. So take, for example, if it was a $20 premium benefit a month, that would actually save, by buying up, $150 in cost sharing every month. So you can get a 7 times benefit in cost sharing reductions by reducing the cost of that premium and allowing people to buy up. So we think it would be really impactful from the perspective of not just being able to have coverage, but being able to use it, because it reduces some of those cost barriers for going to the doctor as well.
Gotcha. And so $45,000 would be the minimum threshold that someone would have to make in Pennsylvania? Or can you clarify that for me? I'm sorry.
Yep, sure. So the current way it would be structured would be for people who make between $22,000 and $45,000 a year would be the main beneficiaries of the additional affordability.
And if we're able to get this through, would they have to re-enroll in that program if they're already a part of PENNIE, but their income falls within that 22 to 45,000? Or will they automatically be part of that?
Yeah, so at open enrollment, we would be able to automatically provide them with additional affordability. And then we would, of course, encourage them to shop around and try to see if they are able to buy up and get that more generous level of coverage so they could use their coverage more readily.
Okay, super helpful. I appreciate that. Want to switch to insurance question really quickly on mental health. What is the department doing to ensure that our health insurance customers have access to the required mental health services under their insurance policies?
Yeah, appreciate the question, Representative. And my team actually recently, in the last month and a half, came back from training Northeast state regulators on how we do mental health parity. We're generally lifted up as a model across the country. Federal regs mention the Pennsylvania process because we have created front-end templates that companies are required to work on that goes benefit by benefit, looks at limitations, look at past costs to make sure that those benefits that are falling into the mental health bucket are treated no worse off than the physical health bucket. So it's been a really, I think, collaborative process in that way with the insurance companies. On the back end, we've had a robust exam process where we've required, I think, upwards of $8.5 million in restitution over the years as a result of our first round market conduct examinations, where we went into all of our largest health insurance companies to look at how they're implementing parity requirements and how they're effectuating it through their policy. So each of those exams ended with, I think, generally a smaller fine, and then with the restitution piece to get money back directly into the policyholders that shouldn't have had to pay a copay, for instance, or had a limit apply or didn't apply a limit that should have been applied because it was similarly applied on the medical side. So we're actually going back now to do round 2 of the exams with those companies because I think the first one was a learning experience. And many of them now, they know where they should be. We see compliance on the front end being much better than it has been in the past years. To the company's credit, they're working with us. They've done a better job pulling together materials on the front end so that we have less of an opportunity for violations to come on the back end.
And you said, just to clarify, $800 million in restitution?
No, 8.5.
Oh, 8.5, okay. And over what time period?
Probably
how far back?
Five-ish years.
Okay, and then round 2 starts?
It is already underway.
Currently? Okay, awesome. Thank you so much. I appreciate it. Thank you, Mr. Chairman.
Thank the gentleman, Representative Mako.
Thank you, Mr. Chairman. Might I say that red looks good on you, sir?
Thank you, sir. Because my executive director has been hating on the red, but thank you, sir. Thank you.
We got to set her straight, and the braces as well. So
thank you.
Mr. Commissioner, I have 2 quick questions for you. My first question being on the Governor Shapiro signed into law the insurance cybersecurity bill. It was his second bill that was signed into law. And it talks about how departments are implementing this new legislation. Can you give us a little bit of feedback on the new reporting requirements? Are companies complying, and is this at all working well?
Yeah, I mean, I think it's working well. We received a total of 78 cybersecurity incidents in 24. The majority were not as timely as we would like them to be, but I think part of that is a learning curve. Our team has gone out and met with the major trade associations and talked really about kind of the implementation of the act, the timing around the act. I think sometimes the national companies, it's hard to keep track of the different deadlines different states may have. So not only are we continuing to work and kind of improve our process, but we're taking a leadership role at the National Association of Insurance Commissioners level to really try to build towards a more national solution or potentially a national reporting mechanism where some of those companies could go in and if their event impacts policyholders in, say, Pennsylvania, New York, and Florida, they could go in and check those boxes and the reports would be delivered promptly to us so the regulators are all receiving it at the same time from those impacted states. So I think still in the learning process, but a reasonably decent start.
So I guess kind of touched on my follow-up question on that with national security breaches and all that. Is there something that we should revisit then with the legislature to maybe strengthen this or tie it to, you did mention other insurers on a national level. Is there something we could do to make this better or stronger?
I think right now we need to kind of continue to let it implement, because part of the Cybersecurity Act, it did stair-step implementation where it didn't all go into effect in year one. There was different stages for different provisions in the bill. I think we're having enough of, I think, a collaborative relationship with all stakeholders, kind of the industry side, the fellow regulator side, that I think we're working towards a together solution and improvements that I don't know that there's anything that I would click off is something that needs immediate legislative action, because today we can, if for more egregious errors, we could impose penalties today. We could go in and do a notice and hearing process and go into that. We just haven't kind of reached that level where a company has been uncooperative once they've reported through our processes.
Gotcha. And then last year, the department issued a notice on the PA Bulletin to use artificial intelligence systems. That's the new hotness, I guess. For insurers, the department testified on that to the insurance committee. We have the chairwoman here with us. But as the chair of the NAIC's working group on the big data and artificial intelligence, can you provide any updates on that, developments or recommendations? How much time do I have?
Representative, no, I really appreciate you know that I'm the chair of that group.
We got good staff.
Yeah, I would say. No, we actually, so that group, we worked through a process where we were surveying the different industries to find out how they use AI is a first step. So we've done that on the personal lines auto, we've done it on homeowners, we've done it on life. We're in the process of doing it on health. I would love to have a report ready by the NAIC spring meeting in March, but I don't think we're going to quite meet that. I think it'll probably be maybe early April by the time, or maybe even a little bit into April, by the time we have a completed report that'll walk through kind of what companies are using AI on the health front and how they're doing it. In the past, on the P&C and the life side, you see it a lot on the claim side, the fraud detection side, some on the underwriting side. I think health is very different, and that's why we segmented it as its own survey. At the same time that we're surveying, my goal also this year through the Big Data Working Group is to, I think, put more teeth and more guidance around what's in that model bulletin. In the bulletin that Pennsylvania initiated. And there's a couple key issues that I think we're going to focus the conversation on at the national level. The first is systems evaluation. And what I mean by that is the companies and how they're evaluating their internal use of artificial intelligence, and how insurance departments can oversee their oversight of their use of AI. So it's both kind of a corporate governance piece where maybe we're requiring additional reporting to the department from the financial front. I know I'm red light, so I'll very quickly say also a transparency piece that trying to find the balance of when and where is most helpful for consumers to understand that a company may be using AI throughout the process. And then the third piece being if there's any prohibited practices, like do you want to require a human in the loop before any adverse decision making? There was legislation in California around that front. I think that makes sense, but I want to look at that further. And when I say adverse decision, it's maybe denying prior auth to the point that we talked about earlier. That shouldn't be done potentially by a machine. A human should have to look at that decision before it goes back to the consumer. So I think we'll be looking at those issues this year.
Appreciate that, and we'll look forward to, I guess, would you say April, having that report out? April-ish.
Yeah, April-ish, it looks like. Shannon's my key point.
Thank you, Commissioner. Thank you, Mr. Chairman.
Thank the gentleman. Representative Khan.
Thank you, Mr. Chairman, and thank you, Secretary Humphreys and Executive Director Trolley. First, I wanted to say thank you. Thank you for your work. As we're sort of dealing with this chaos out of Washington and trying to grapple with what $880 billion in cuts to Medicaid would mean, I think about our Commonwealth, where we have about 3 million people that are on Medicaid. When the Affordable Care Act allowed people to get access to Medicaid, think Pennsylvania, we have about 750,000 people that are on that insurance. I can tell you, everyone here knows, but I'm a nurse practitioner, and our federally qualified health center in our community, before the ACA was passed, 25% of people were uninsured. After the ACA was passed, the uninsured rate went down to under 10%. And when we're thinking about the people that have Medicaid, I think in Pennsylvania it's like 1 in 4 people have it. And in my district, it's about 1 in 8. And so what will happen to these people if they lose their Medicaid? If Washington is successful and they lose their Medicaid, what happens to these people that were on Medicaid? What are their options?
So I'll say from the PENNIE perspective, currently it's a continuum of coverage based on income. So if someone's income is below 138% of the federal poverty level, they would qualify for Medicaid, and if it's above that, they would qualify for financial assistance through tax credits through the marketplace. That wouldn't change. So I think it would, not to speculate, but it wouldn't mean that they could come through the marketplace, for example, if their income didn't meet the income standard. So I guess answering more of what wouldn't be an option in that scenario, and I think in looking at the marketplace stability as well with the tax credits, I think, just trying to think through the options that people would have, it would be, I think, a difficult scenario.
It's like sounds like they're pretty much out of luck, right? Pretty much. It's like option A is Medicaid. Medicaid's gone. You're out of luck. But I know we talked, and Rep. Young did a great job. We were talking about the subsidies, and so if someone is on Medicaid, they're currently a part of that expansion where they now qualify. Can they even get those subsidies in Pennsylvania? Do they even qualify for them? The federal subsidies for the ACA?
Nope. So it's a continuum. So based on income, if they're below a certain income threshold, they're eligible for Medicaid. And if they're eligible for Medicaid, they are not allowed to enroll through the marketplace. They are not eligible for the tax credits through the marketplace coverage. It was really intended to be a continuum of coverage options for people depending on income. But a core tenet of being eligible for the marketplace is that you don't have access to other coverage and that you meet certain criteria, such as income levels, to be able to have the tax credits.
So they're pretty much out of luck. I mean, it sounds like they're locked out. So it's actually, at the double, not only do they not have health insurance, for someone who has, 130% of the federal poverty line, someone who's above that, they get access to the subsidies. But if you're on Medicaid and you lose your coverage because they take it away, you can't get even those subsidies, those federal subsidies.
That's correct. Yeah, our eligibility, assuming our eligibility criteria stay the same, they would have to meet all of those criteria in order to be eligible.
And for the people who do have who do have coverage through the exchange that are getting these subsidies. So what happens if the feds don't act and they lose their subsidies? What happens in December? What happens to their premiums and what they end up paying? People who have insurance. Yeah, so if we modeled it out to say if we took away those enhanced tax credits now, what would people pay? And it increases costs by 82% on average across Pennsylvania, including double for many populations, including older residents, people in rural areas. And so I think likewise, if the coverage becomes unaffordable and they're eligible for the marketplace, they don't have an option, for example, to go to Medicaid, right? Because the programs are mutually exclusive. They're intended to you're eligible for one or the other. So if through the marketplace, if the premiums were not affordable, they would also be looking at full price or going uninsured. Yeah, I mean, I can say as a healthcare provider, it's really scary for me because I know that these patients, they have no other way to get healthcare. I mean, the fact that they're able to get it under Medicaid. So what happens is when they don't have healthcare, they end up going to the hospital when the treatable condition is now no longer treatable, that they have to go to the hospital. And someone's going to pay for it, and it's going to be us. So the question, I think, is when do they get it? Do they have Medicaid so that they can pay for it, and they can get those covered services paid? Or do they have to go to the hospital when that early condition is now something where they have cardiomyopathy, and now we're looking at a lot? So Well, I just want to thank you for your work, and I think this is something that our body should be very concerned about if these cuts go through, because not only will it affect our patients, it's also going to affect the hospitals, because again, someone is going to pay for it. We're going to end up paying for it. And if 1 in 4 Pennsylvanians have this insurance and they lose it, then someone's going to eat those costs, and it's going to be us here in the state government. Thank you, Mr. Chairman.
Thank you, gentlemen. Representative Flood.
Thank you, Chairman. Welcome, Commissioner Humphreys and your team for being here today. The governor is proposing $4 million for the Pennsylvania Healthcare Cost Containment Council, otherwise known as the PHC4, to develop an all-payer database for an interactive, user-friendly online tool. And as I dive into it a little bit, it seems to me like it could be a little bit of a bureaucratic overreach. And given that most of these public reports can be quite complex, how exactly will consumers use this database? Will it help consumers shop and compare insurers and provide provider networks?
Yeah, Representative, I think that your point on them being complex is right on, because I think today there are transparency regs that apply that compliance stinks. And we actually run into this even with when a health insurance company and a hospital are trying to negotiate contracts, they'll both be relying on the same publicly available data set and come to vastly different conclusions on what that same data says. So the idea of an APCD is you're going to bring this information in and you're going to simplify the information and you're going to create a public reporting where, like, it'll show, I'll be able to go on and see if I'm going to get a knee replacement, what the average cost is, what the payers are paying at these 3 different facilities, for instance. So as I'm shopping for a potential elective procedure, for instance, I'm going to have an idea of what that cost will look like. Now, on top of that, I'm probably going to want to go onto my insurance company's website, and they could improve kind of how they show the patient experience. But because I'll have the general information from the APCD that'll show me costs. It'll show provider A is substantially less cost than provider B in general. And then I'll want to know what my out-of-pocket costs could be, because that may still differ depending on where you go. But the idea behind the APCD is really to bring far better and easier transparency to consumers versus today a consumer could never make sense of what the publicly available data files look like.
So how is this going to help drive down healthcare costs?
Well, I think it would make all healthcare costs more transparent. So, and when you're looking at the transparency piece, it'll also come into, I think, the hospital negotiation piece, the reimbursement payment piece, and then the consumer piece, because this ultimately hits them in the pocketbook on out-of-pocket costs. So to the extent that we're driving down the spend, it'll have the necessary impact of continuing to push down the overall health cost spend and hopefully address some of the increase. I mean, that's one of the most significant increases is just medical trend in the rates that we see. It's 8 to 10%. I think a lot of that is due in part that because people don't know how much things cost today. And an APCD is going to help people understand what they do cost.
So can you explain what exactly the $4 million is expected to cover? Can you clarify how the administration will use this data? Because as you can understand, people are very concerned and about having information out there, personal information. So is this going to have personal information for people who might be getting this said service?
No, it won't. It won't make publicly available any personal identifiable information. It would be claims data. I would assume it's going to be person agnostic, but you'd still have the claims data that would come through for the event. So how much was charged, how much was the max allowable amount for the insurer, how much the insurer paid, how much the consumer paid, would all be there.
What exactly is that $4 million going to be used for?
Yeah, most states that have an APCD have contracted out because it's a big tech build. So there's a lot of companies out there. I think part of a $4 million would potentially be setup fees, would potentially be contract fees with an APCD if PHC4 weren't to build it itself. But if it were to build it itself, it would need kind of the IT infrastructure, and I think $4 million would go towards the infrastructure and the build around what ultimately is a new reporting system that needs to be able to talk to providers and payers. So there's a lot of technology on both the front and the back end that's required when you're pulling together an APCD.
So how do you plan on measuring the success of the database achieving cost containment?
I think we'll be able to see success coming in future rate filings. And what we'll be able to see also, because your last question, and I didn't get a chance to get to it, so I apologize, was kind of some of the uses that the department would like to have if there's an APCD. I'd love to be able to look at it on the front end when we're looking at the benefits that are in a policy. I'd love to be able to look at it from a network adequacy piece. If an insurer is listing providers that nobody in their block of business ever goes to see, should that count as a provider for adequacy purposes? Probably not. And then I'd like to look at it from a back-end claims and complaint perspective as well. It would really help the parity enforcement because we'd have access to that data that we could go in and kind of look at the overall spend across different segments in the market. It could also help, I think there was a couple questions on mandates earlier. It would help try to gauge the cost of new benefit mandates as they're implemented across the state.
Well, I appreciate your answer, and as we all know, healthcare costs are getting out of control, so hopefully this is something that can help drive some costs down, so I appreciate it.
Thank you.
Thank the gentlelady. Representative Webster.
Thank you, Chairman, and thank you, Commissioner and Director, for being here this morning with your team. I wanted to talk a little bit about the Flood Insurance Premium Assistance Program Task Force. I think my colleague from Westmoreland did a great job on that, so I'm going to sort of sum it up maybe to some overarching discussions in the same area. And I recognize this is a budget hearing. We're talking about large-scale policy issues that are going to impact whether it's federal funding that undermines an insurance market. In this case, with flooding, I should give you just a little background. In my district, 2021 Hurricane Ida, 74 homes were destroyed. Those are green space today. 74 families lost their homes. And turns out, when you do the analysis, that in the 130 some years of the U.S. Geological Society survey tracking floods on our watershed, that 18 of the 20 largest storms occurred in the last 10 years. So we have powerful storms, a lot, they're reoccurring. I know that insurance markets in other areas, whether it's wildfires or as we talked about, the price of car parts. At what point does flood insurance become taken away? Like we get to the point where a market fails in that regard.
Yeah, appreciate the question, and did also to the other representative and everyone here. We are welcome to come out as you have community events. Would love to get my outreach team out there to talk about the services we offer and just flood insurance in general or insurance issues. Part of what we're trying to do is really raise awareness of the insurance department. Like, I think very few secretaries probably came to you and said, like, I'm really excited that we have 3,000 more complaints to our department year over year. We want to know what's happening in those communities. And in the flood space, we've actually seen, Representative, more uptake in private flood, in companies that are interested in writing flood, and they're coming up with more innovative solutions, which we're trying to encourage and engage in those conversations. Companies that will write perhaps just a layer of flood coverage, maybe $20,000 to $50,000 of flood coverage, but that's often what somebody may need. The average flood claim from, I think, an inch of water is somewhere around $25,000 according to FEMA. So if we're able to buy flood, there are mutual companies that'll add it as an endorsement to your homeowner's policy. If you're able to buy a layer of coverage and we're talking about really affordable coverage in this case, like in the $50 to $100 range versus when you hear what NFIP premiums look like in designated flood zones. So I think there's a lot of interest and appetite for flood, and one of the things that we've really been trying, one of the messages that we've been trying to get out there is everywhere is in a flood zone today. There's special flood hazard zones where you're going to be required to cover it for mortgage purposes. But to your point, to the point we had earlier, there are plenty of areas that just standing water, excessive rain is going to lead to flood. And in those areas, flood coverage can be very affordable outside of those special flood hazard zones. So we're trying to encourage innovation in the industry, really engaging with the industry. One of the recommendations of the flood insurance report was to kind of further study other innovative opportunities. I think maybe we need to go down that path and see kind of what other programs different states may be looking at, different cities or municipalities have come up with different innovative ideas. Some even outside of an insurance space, a financial derivative that we've heard of in the past. Essentially, it would be a metric that if you get 2 inches of rain over an hour period or something, it would automatically pay out to an association that would then send it out to different members. Just, I think that the point is that we are seeing private industry come up with innovative solutions. We want to additionally encourage that and have those conversations so more companies are offering more robust options so Pennsylvanians have different options.
That was a more hopeful response than I was expecting. So thank you for that. This might be a question more for the director, but I think it applies across the board. Private equity in my area, and I see the yellow light. Mr. Chairman, if there's a second round or something, maybe I'll come back to that question, but I know I'm out of time. Proceed. Thank you, sir. In my area, we've also noticed that a large percentage of specialty practices in medicine are being bought up by private equity firms. And surprisingly, some of them then say, I'm not accepting your insurance. You know, you have to give me a credit card before you even get an appointment. And that's, you know, an astounding realization. And let's say, in my case, where we think we have pretty good health insurance coverage. Has that presented itself, you know, to your level at this point, or are you seeing that at a more dramatic level?
Yeah, I mean, we've had issues with private equity on the provider side, and kind of particularly in the negotiations with insurance companies over whether to be in contract. I think some of the threats to contracts, some contracts that even were terminated for a period of time in the last year, PID has got involved in some of those that then were settled. We worked with both parties on that to bring people together. It does raise a unique set of circumstances. I know that the governor spoke to PE in wanting to look into the challenges that PE is posing in the healthcare space, and certainly through the transactional space. PID, we have authority over kind of when insurance companies are acquired, so we don't see as much PE on the insurance company side yet, although we do have a couple domestics that do have a PE element. I think more we're seeing it, to your point, on the healthcare side, and where it's going to come up is through these provider negotiations, through the certain hospitals or facilities that may be financially challenged, and kind of working with the state, and certainly having more oversight and more of a process into the dealings in that space, I think may be helpful and worth looking into further.
Yeah. Is there impact on PENNIE? Have you seen that at all yet?
No, not outside of the networks that the insurance department reviews.
All right, thank you. Thank you, Mr. Chairman.
Thank the gentleman. Representative Eckert.
Thank you, Mr. Chairman, and thank you, Commissioner Humphreys, for being here. I appreciate the opportunity to ask some questions. I'm going to talk about the M-Care Fund assessment, which covers secondary medical malpractice insurance for healthcare providers. I believe this fund has seen increases over the last couple years, 19% in 2020 and 2021, 26% in 2024, and now this year in 2025, 29%. I'm just curious, what does the department attribute those increases in that to?
The fluctuation pretty early on, I think, is pretty clearly tied to at least the early years of COVID. So it had historically been at 19%, but M-Care is a pay-as-you-go fund. So during COVID, the court system started shutting down. We weren't getting as many settlements. We weren't getting judgments. M-Care wasn't implicated in terms of claims payment. So we actually dropped the rate pretty significantly. But then coming out of COVID, and once the courts started clearing their own backlogs, you had significant volume pretty quickly. So it caught up and surpassed kind of what our standard volume had looked like. So it spiked back up. And where I think we've been staying on the higher end now, because I think now we're comfortable that the court systems have largely cleared the backlog. So now what we're seeing is more significant settlements, more significant judgments that has continued to require more payment, and MCare has been utilized in that space.
So to that end, I think you're right. I would agree with you. There's been more significant settlements in large amounts. And have you guys evaluated, obviously we know the Supreme Court changed the medical venue rule. Have you seen impacts of that as attributed to these significant increases?
Yeah, I think part of this question, Representative, is very soon, because the lag in when a claim would actually come and hit the insurance side is over a year long. So we actually expect the first of the post-venue rule settlements and negotiations to be coming in the next several months. So the changes that we've seen so far from a cost perspective are outside of the venue rule change. I think what you've seen with the venue rule is coming out of, again, there was a COVID uptick that it looked like the Philadelphia numbers were flat, and then the Philadelphia numbers spiked in particular. But a lot of that was because they weren't accepting cases. The courts had closed. But now that we're kind of a few years out of COVID, post-venue rule, I do think we're seeing general stable numbers in terms of filings. Where filings are being made looks like it may be different. But really, to see what the ultimate cost of those changes looks like, we're going to need at least a couple more months to get those first numbers rolling in, and then I think we'll continue to see that into the future.
Does the department have any concerns with medical malpractice coverage as some of these, obviously you're saying that you haven't really seen the true effects of the venue change, but does the department have any concerns with medical malpractice coverage in the Commonwealth as some of these MCare assessments continue to go up?
Yeah, I don't think it's necessarily unique to the Commonwealth. I think we're in a harder market in the liability spaces in general. So not only in the med mal market, which we are certainly seeing. The challenge, I think, in the med mal market is most of the coverage written in Pennsylvania is written outside of regulated insurance companies. It's surplus lines, it's risk retention groups, which is when a band of like businesses comes together and essentially writes their own insurance. But those premiums, even in that case, continue to rise to address the rise in potential liability. So I think we're seeing increased liability costs, less interest in taking on more liability risk, which is all present in kind of a turn towards a harder market and higher costs.
What's the department's role in trying to, I guess, manage that increase or to make sure that medical malpractice is affordable? What role do you guys play in that?
Yeah, we have the unique role because we have MCare. So we really have two sides. So on Shannon's side, within the PID, the IROF side, we do review med malpractice rates on the commercial side for those instances where the commercial market provides coverage. So again, that's limited. But then on the MCare side, we're responsible for paying claims in that limit above the private company or the private insurance before it comes back to the private insurance. So certainly have an interest in maintaining affordable rates and actually are kind of setting up a website that should be up any day now on tail coverage for providers that are part of maybe facilities that have been purchased or gone through bankruptcy to make sure they can access coverage on a going forward basis. But I think there are certain challenges, and we're trying to kind of work through that and understand from a cost perspective what it means on the insurance side, both here and I would say nationally.
Thank you, Mr. Commissioner. Thank you, Mr. Chairman.
Thank the gentleman. Representative Curry.
Thank you, Chairman, and good afternoon, Commissioner, and to the team. Thank you for being here today. The topic that I bring up is a sensitive one, at least for me. In the last year and a half, having to deal with life insurance policies and benefits It can be a really tough time for those who are left behind, trying to navigate and figure it out, particularly when there's no will, or companies say there's no beneficiary statement, or there's issues where a spouse is trying to look for benefits after a spouse has died suddenly or in an untimely manner. I was happy to learn, though, and didn't know about this when I was going through it myself, about the life insurance policy locator service. And through this process, the department works with insurance companies to connect beneficiaries to payments they are due to receive. Beneficiaries are an important part of our life. Most of us are busy living and not thinking about the day that we're going to die. And so checking in on these beneficiaries and making sure your paperwork is correct. There's always a tug and a pull that I've learned, unfortunately, personally. There is no beneficiary. There is a beneficiary trying to find paperwork. This locator system is a good thing. So can you tell me how many beneficiaries were helped through this process, and how much in life insurance payments were collected by those beneficiaries? And how can we help our constituents as elected officials? Because typically we have folks coming in despair when this happens to them, to be a potential life insurance beneficiary connected to this locator service.
Yeah, absolutely, Representative. Appreciate the question, and I'm sorry to hear that you went through a situation like this. And that's really, I mean, exactly what this service is for. You nailed it on the head. At a time when people are so challenged, the last thing you want to do is try to think about life insurance policies, trying to dig through old paperwork to find out if there was coverage, who the coverage was with, how to claim on it. So we have worked with insurance companies required to participate in the life insurance policyholder service. We had just shy of 6,000 individuals that were matched in Pennsylvania for $140 million.
Wow.
So, I mean, that's them getting to these benefits that are rightfully theirs sooner than later, and certainly through a process that is tried to be as simplified as possible. So I think to build on my offer earlier on the flood insurance side, this is exactly the type of thing that we have an outreach team for. So we would love to come out to your communities to let people know about different services like the Loss Policy Locator. If we don't already have a handout on the Life Insurance Policy Locator, glad to work on creating one that you all can use to send out to your constituents to make them aware of it, because it really, I think the fact that we're touching 6,000 people is a big deal. People are finding out about it. We get thousands of these requests a year, even on top, because not everybody is a match, and that's challenging. But for those that are, it's life-changing. So glad to help kind of bring awareness to it in any way that you think would be helpful.
No, I appreciate that so much. And when my colleague earlier, Representative Mays, talked about the service, the questionnaire, and one of the things you said was best practice of explaining the benefits. And I think that's something that, as we go through this process of trying to help people who are experiencing loss, when people are busy living, like I said, oftentimes they'll sign up for something, they're not keeping track of things, and when a tragedy happens or something happens where they are in fact looking for this benefit, how can we work with you, and you work with us, to try to help our communities understand better the need? Because even having a personal experience, I have run into so many people, and we have these estate planning things, but what is your suggestion?
Oh, and we love to participate in them. My team is going out to a couple senior fairs in the next couple of weeks just to talk about kind of financial management, financial planning in general, including kind of pulling records together, making beneficiaries aware of different information. So glad to continue to partner with that. And we try to make literature available on all different aspects of the insurance life cycle. So if we don't already have one dedicated towards financial planning, kind of from the life insurance side, glad to ask the team to kind of build on that so we can make that information more readily
That
available.
would be fantastic. Thank you. It's always good to know where there's additional resources in the state, and I thank you for that information today. Thank you, Commissioner, and thank you, Chairman.
Thank you, Gentlelady Representative Guzman.
Thank you, Mr. Chair, and thank you all for your time this morning. It seems to me that a common theme this morning is that anytime an insurance company has to pay, and anytime they get an opportunity not to pay, they'll take that opportunity not to pay and pay out on their obligation. And that obligation, of course, extends to our small business owners, in particular to our towing companies, which, of course, I want to preface my comments in saying that, of course, towing companies aren't the favorite occupations in the city of Reading and in the county that I represent. But, of course, they do provide an essential service to our roadways and preventing safety accidents and et cetera. And so one of the ways that Pennsylvania insurers are blocking tow operators and, of course, hurting small business owners is they are frequently denying claims for vehicle recovery and towing costs. For example, to my colleagues in this committee, if a car crashes into a house, the insurer pays to repair the house, but denies paying the removal of the vehicle blocking those repairs. Another example, if a vehicle damages a guardrail, PennDOT is reimbursed for the guardrail repair, but the tow company is not reimbursed for removing the vehicle that made the repair possible. Finally, another example, insurers cover the cost of environmental cleanups, such as fluid spills, but refuse to cover the cost of removing the wrecked vehicle that caused the spill to begin with. This puts business owners, towing companies at an unfair financial burden. In fact, many of those same tow companies that are owned by mom and pop business owners across our Commonwealth have reported hundreds of thousands, if not millions of dollars of losses to the insurance companies. So, Mr. Commissioner, I'd like to ask you, other states, including states like Maryland, Delaware, and Virginia, their insurance commissioners have already issued directives requiring insurers to cover vehicle recovery and towing under property liability insurance. So my question to you is, will you follow the same directive as those other states in requiring that insurers cover recovery and towing under property liability?
Yeah, Representative, really appreciate the question, and it's very timely. The Towing Association actually reached out to me, I think, in a letter a week ago, and it was really the first time that this issue's been brought forward to me. We don't get a lot of complaints about it through the Consumer Affairs Unit, so we're planning to meet with them and really would love to see kind of these complaints and bring it back and look at it from what's in the policy and what's not in the policy, because in some of these cases, there's certainly coverage for it. So we want to be able to look at it on an individual basis and welcome the conversation with them to see what the actual issues are that we're seeing and be able to tie it to a policy, because I think being able to tie the complaint to an actual benefits in the policy will help us understand if and where companies may be going wrong, and then we can work to do that. And if a bulletin is warranted after we get a chance to look into the issue, we'll certainly look down that path as well. But I really want to be able to take that issue back and look at it with those interested stakeholders. So as they're reaching out to you, Representative, please feel free to send them to us as well, because I need those complaints, and I really want to have those conversations to see where we may be missing the boat from the PNC insurance side.
So yeah, I mean, it just doesn't make sense where in our surrounding states, those liability issues are covered by the insurers, and yet here in the Commonwealth of Pennsylvania, they're not. And so a business owner in my community has lost over $200,000 over the last 2 years just in losing costs over property liability insurance costs. And of course, he's not alone, and I'm sure he's not alone, and this issue impacts all 67 counties across this Commonwealth. And so whatever you can do to help small business owners, and again, I know that they may not be the most liked business owners within our respective communities, but they do play a vital role in protecting our roadways and protecting our communities from safety. And of course, it's not fair for small business owners to take on this huge burden when insurance companies should be taking care of their contractual liability. Thank you very much, Mr. Chair.
Thank the gentleman. Chairwoman Pickett.
Thank you, Mr. Chairman. And Mr. Commissioner, thank you so much for being here today and your entire team. I think the questions from our members have been outstanding, and we do appreciate your time to answer those. My number one concern in being part of the Insurance Committee is the consumer. I always try to keep them on top of the list, and I hope we all remember to do that. So today I heard a lot. I'm just going to talk about some of the things that really hit me today for that consumer as we went through some of the discussion today, and how much this subject does affect that consumer. And you used the word awareness a couple of times. I think your department is a big piece of that awareness, and I'm glad to know that you're looking forward to doing more of that. You certainly are invited to my Senior Expo, and I hope you're on my list. I will check that. I also want to say that I have a great concern for those local pharmacies versus the PBMs. I represent a very rural area, and I have recently had several of those owners, longtime business owners in small towns that really matter to their customers, but they are having a struggle that's probably going to take them out of business. I'm very concerned about that. The legislation that we passed goes into full implementation in 2026, I understand. I don't think a lot of them are going to make it to that timing, and I'm not sure that it's enough help when it does. So I have a deep concern for that, and I'm hoping that we're all going to focus on that in the very near future, because we do not want to lose those businesses. They matter in those areas where somebody would have to travel. Not only is it a small business and a family that's been in business a long time in our areas, but they matter to the distance that somebody's going to have to travel to be able to, if they don't want to go mail in, to be able to go where they can talk to a pharmacist when they get their medication. I also want to re-comment on the fact that we do have a way through the department for people to be able to research outstanding, maybe forgotten life insurance policies. It happens, and people don't even know. It's kind of like the Treasury's Department of looking for unclaimed property. This is money that's out there that has been paid for, and people may not know they have such a thing available to them for final expenses and so forth. So that's an important service, and that's part of that awareness that I think we can do more with the customers that we serve. And the fact that people may not even know that a denial is not the end of the road, that there is a way to appeal that. I say that to my constituents a lot when they talk to me about such a thing. I say, I know it's extra, I know you shouldn't have to sometimes, but do file. It could matter to you, and the way this is affecting your health does matter. Also, someone brought up the fact that as representatives in our district, I have to tell you, it's a couple of times a week that somebody comes in and says they've got a suspension because the department says they don't have insurance. They do have insurance. They just went with a different agent. We really need to do something because it creates so much anguish and time spent for that constituent and our offices. Not that we mind, but they shouldn't have to come to us. They shouldn't have to do that. Let's get that one fixed. Let's put that one right down on the list and get it fixed if you can. And I'll just wrap up with an actual question on credentialing. I don't think it's been brought up today. I do get a fair amount of concern and questions on credentialing from my healthcare systems. We're again in a rural area. I've said it so many times, but we are, and we have difficulty attracting good professionals. And when we can't get their credentialing needs through in a timely manner, it all falls apart. They go someplace else, or they do something else, or we may lose that opportunity at that professional. I get that question fielded to me a fair number of times, and I'm wondering, are we working on a reform for that? What's the process on that? Are we doing? I think I've been told there's a fair amount of redundancy in that whole process that could probably be done a little bit differently. Can you comment to me on that?
Yeah, we're in the midst of engaging on and credentialing. After the governor's roundtable on rural health at the beginning of last year, PID working with DHS really sought forward to see what we could do in the credentialing space and how we could streamline it and make it simpler for providers. And I think it's important that both Secretary Arkush and I have been very clear to providers and to payers that we envision the solution working across our departments. There's going to be no silos in what ultimately becomes, I think, a credentialing solution. So we've engaged the payers and we've engaged the providers on where those bottlenecks are in the process. I think we've had a robust information gathering stage where a vast majority of providers in Pennsylvania use an organization called CAQH. Its board is insurance companies, so insurers also have a stake in making sure CAQH works well for providers and for themselves. And so they're already using that for application purposes. What we have found is the challenges actually lie on the primary source verification piece. So it's the license piece, the make sure I have med mal insurance piece, it's any investigations at the federal or state levels, it's where the doctor is accepted for admission purposes. The companies have a number of different third parties that sometimes they use and sometimes they go in-house. So it ends up being where a provider could hear from 9 different companies 3 different ways on the same questions for the same data. So I think that's where we've kind of narrowed the focus on how we can improve that process. And really, I think to both of the sides, I shouldn't say sides, because I think they're all looking at this as an opportunity. I think we've all reached the point where we've moved beyond, we do it this way because we've always done it that way, and more towards how can we really improve this experience? Because it also ties later down the process to provider directories. PID just released studies on how provider directories tend to have pretty significant inaccuracies. So really, we're working with the parties on what that looks like. A lot of your larger systems will do what's called delegated credentialing, so the company delegates it to the system to do the credentialing themselves. We know we want to preserve that because from the provider perspective, we've heard that it works really well. So we're also looking at different third-party opportunities potentially in the delegated space where maybe rural providers could band together for delegation purposes to streamline, because a lot of the rural providers, to your point, Madam Chair, don't necessarily have the resources to dedicate from a staff perspective to dealing with all of this back and forth with the insurance companies. They need to be kind of out there delivering medicine as they plan to do. So we're getting closer. I don't have a timeline for you yet, but I think the progress has been pretty significant, and the fact that we have all buy-in from, I think, the payer and providers, I think is very positive as part of these negotiations and discussions.
Thank you. I do appreciate that, and thank you, Mr. Chairman, and thank you, Mr. Commissioner, for this opportunity.
Thank the chairwoman. Chairman Frankel.
Thank you, Chairman, and thank you, Commissioner Humphreys, for being with us here today. And I really appreciate your discussion about resourcing PHC4 to be able to obtain the ability to have an all-payer claims network. It's so important, I think, at the end of the day for determining, I think, what you talked about in terms of network adequacy. And one of the things that we have heard repeatedly here at prior hearings with the Department of Health, Department of Human Services, are the concerns that we have in this state with respect to rural health care in particular. And we know that with respect to that, certainly medical assistance is a major payer in rural areas, as is Medicare. But what role can commercial insurance play in ensuring rural healthcare access, and what are the network adequacy requirements in commercial insurance, and is that a tool to protect access to care in rural areas?
Yeah, network adequacy is a tool to help protect access. I mean, network adequacy has pretty big concentric circles based on whether you're in an urban area or a rural area. So in the rural areas, federal and state law would provide for greater time and distances between providers. But it's something that we're trying to really build, and since we've brought it over in 2020, the Bureau of Managed Care to now become our healthcare claims access unit, we've really been focused on strengthening our network adequacy review process. We have now more robust templates. We're looking at where we can improve further and whether we need additional legislation to strengthen or tighten, like the bands that are allowed to be used and how far the distance could lie. I think in the private payers are a significant part of the rural system as well. By the Rural Health organization, they've been there and part of the conversations on how we kind of look at reforming the delivery and the payment for rural health providers. Certainly looking at value-based care as opportunities, different payment mechanisms to help providers' offices succeed while making sure that individuals have to travel as little as reasonably possible in the rural areas. So it's one that I think the commercial payers are interested in also being part of the solution on, and we'll continue to engage them on different payment opportunities and networking opportunities to make sure that we're getting robust networks as possible in our rural areas.
And I would just add that from the PENNIE perspective, the uninsured rates are higher in rural areas, so it has been an area that we've focused, and we've actually been able to see more growth in rural enrollment compared to our overall growth. So we want to continue to raise awareness about PENNIE being an option for people who live in rural areas as well.
Thank you very much. Appreciate it. Thank you, Mr. Chairman.
Thank the gentleman. Chairman Struzzi.
Thank you, Chairman Harris. Thank you all for being here today. I want to go back to some questions that we had earlier from our committee members on the return to the general fund line that continues to decline. It was stated that in fiscal year 23-24, in addition to what you had put initially, there was 21 million put back in. The following year, roughly 16 million, and then the projection for this year is 5 million. And I know you said that these numbers are not accurate or correct. So could you please then, and you can follow up with this later, but please give us the most recent estimates for the IROF balance sheet and include details of total receipts and total disbursements. Can you follow up with that?
Yeah, we will, Mr. Chairman.
Thank you. And I have a couple of questions. I know we had some discussions here this morning about car insurance. The rates continue to go up exponentially. I read an article that Pennsylvania was one of the 5 states to see the fastest increases in car insurance in 2024, between 33% and 58%. Do you know why we would be one of the states singled out as one of the fastest to see those increases?
Yeah, Mr. Chairman, this has been a pain in my butt for a period of time because there's not a whole lot of actuarial science to what the articles use when they're quoting rates. So as you get questions and see these articles, feel free to reach out to us because the best source of information is an NAIC annual auto data report that shows what people actually pay. So when you look at what actually pay, like our average rate is $1,100 a year in 2022 is what it was, which is lower than New York. It's lower than New Jersey. It's lower than Delaware. It's lower than Maryland. It's lower than the average in the United States. But you never see that in these reports because what they do to come up with these quotes is cherry pick a few characteristics of a driver. When insurers, when they actually quote and write your business, use hundreds, thousands of different characteristics, they're coming up with general assumptions of our auto market using like your age, the car, where you live, but doesn't look at any of the factors that companies actually use to rate auto insurance. So, I mean, based on those sort of assumptions, if you were to actually run it through a company's quoting system, you could get results that would be from like, and I actually asked this of my chief actuary, you could get results that would range from like $600 to $4,000 depending on the characteristics that you use. So I think what people actually pay is more important than what some of these surveys, I know it's good headlines, it's fun to write about, but it's not actually what people are paying, what they're actually seeing.
Well, on that note, though, I know you outlined some of the factors that contribute to that, and I have 5 drivers right now in my household, including 2 teenagers, so I feel the increases. But the question I have, like, you know, we see more and more demand, more people driving EVs. Does that play a role in increasing the insurance rates?
I don't know. I'd like to take that one back, Mr. Chair, and because I'd like to talk to the actuarial team to see how much they're seeing that come up in the rate filing process.
Only because, you know, when you have an accident involving an EV, you know, the emergency responders have to deal with a whole lot of other issues when it comes to the batteries and all that kind of stuff. So I think I would appreciate you getting back to us on that, because I'm curious to see what role that might play in those rates. And then finally, the EMS situation, you know, in rural areas continues to be a challenge. Ambulance services still aren't getting enough in reimbursements or coverage for those trips that they make that, you know, that aren't covered. And so your perspective on that, and then what you think we might be able to do to help with that situation.
Yeah, that's a challenge that we get a number of complaints on, is just really from the balance billing perspective. Right. An EMS provider that gets direct paid from an insurer isn't then allowed to actually reach out to the insured for payment of the difference. So that's where that's been coming to us, but certainly have also heard from the providers that are financially challenged, have met with a number of them in different settings. And certainly bringing that back and talking to my health hub colleagues, and that's, I mean, because all of us are impacted in some way. Like EMS kind of rolls up through DOH, but obviously DHS is a major payer of EMS services as well. So it's something that we're collectively looking at, and would like to take that one back as well, Mr. Chairman.
We'd appreciate that, and any recommendation that you have to remedy that increasingly dire situation would be helpful.
Sure.
Thank you all for being here, and thank you, Mr. Chairman. It's been a long couple of weeks.
Thank you, gentlemen. Commissioner, I have, I guess there's one question that is very personal to me, and it's about colorectal cancer screening. In early 2023, the American Cancer Society reported that 20% of those diagnosed in 2019 were patients under the age of 55, which is double the rate of what it was in 1995. The rate of advanced disease increased by 3% annually with people younger than the age of 50. It is predicted that in 2023, an estimate 19,550 people under the age of 50 would be diagnosed. I did not know when I read that statistic some time ago that one of those folks would be my wife. And she passed away in 2024, at the age of 36. When she was diagnosed, she was already stage 4 with colon cancer. Now, we have a law that requires a screening at 50, and one of my colleagues wants to move that to 45. My question for you, is 45 low enough? That's number one. And if it's not, then what is the age? My wife was diagnosed with stage 4 at 34. And as much as she fought, she succumbed to the disease by 36. So is 45 low enough? Are we doing enough? And are we screening young enough?
Yeah, I hate that for you, Mr. Chairman, and I'm sorry to have that come up, and certainly the circumstances around it. Insurance companies on the commercial side are required to cover USPSTF recommendations that get an A or a B rating. So today at the A level is 50 plus, as you mentioned, is also mirrored at Pennsylvania statute. At 45 plus, the commercial companies are required to offer the coverage. And then if it's recommended or offered to cover the service, and if it's recommended, they're also covering 45 plus. I'd need to go back to, I obviously don't have a medical degree myself, but would want to talk to kind of Dr. Bogan and others, because I don't have kind of the expertise to tell what age limit would be or should be tested and required to be covered for those tests. But certainly require or tests that are recommended at younger ages. If a specialist recommends that they see for kind of special circumstances, even at 35, 36, I would be interested in where the insurance company would look at that from a prior auth perspective, because if the oncologist and other providers are recommending that this person's at high risk, should be tested, I don't know today whether they would cover it based on those recommendations in their medical literature or not. So that's certainly something that we'll take back on our side too, while we talk to DOH on where the recommendations may be.
I mean, there is a body of work that is showing that millennials and Gen Zers make up a big portion of the new folks being diagnosed with colon cancer. And it's one of those diseases that you can have and not notice the symptoms. And by time you do notice the symptoms, right, you're already at stage 3 or stage 4. So I would just say that we need to be doing something more to make sure more of our young people are getting screened and tested, but that their insurance companies are covering said screenings. People are dying, and it's just basically because, you know, you didn't get pre-authorized, or we don't think that you're at risk. Well, I wouldn't have thought my wife was at risk either. She was. And I can't think about all of the other folks in our Commonwealth who have the same situation where you might not think you're at risk. It may not look like you're at risk, but something as simple as a screening ahead of time could save that person's life. My wife died too young, and simple screening could have saved her. So please look and see what we can do.
Absolutely.
All right. With that, this will conclude our hearing. We'll be back at 1:30 with our treasurer. Thank you.